Oh God, both of
What?
you on one stream. Is this like Inception of some sort? Like, are you allowed to have that? And somebody's, I got New York and Florida vibes. Is that what we got going on here?
I'm
Okay,
in
LA was my
LA.
second bet.
LA, Florida.
Yeah. So kind of Florida
All
vibes.
right, so
Boys,
Yeah.
you guys put in some fucking work on that report. I opened it this morning, hoping to just do a quick skim and pull some stuff out that would be easy for us to talk about. And I was like, oh, this is not going to work. So
yeah, but maybe before we jump into that report, I know you guys both had some takes. We spent the top of the show here talking about base app, Brian's awakening, what the future of the base app should be. You guys, I think, had some hot takes. I'm not sure if that's changed since you posted those things. Like, are they focused on the right things? What should they be focused on? Look at you, Sam. You had a hot take, a very short hot take.
Go to me first.
Yeah, why not, man?
We've AJC and I have talked about this at length. I feel like I don't know. For me, I find the appeal of like the neobank roadmap much more compelling than the social one, just because I haven't really seen any sort of demand for financialized socials. We've seen a lot of demand for social trading through things like FOMO or just like wallet tracking and all that. I feel like that to me is a more compelling vision of like social fi. But I also just, I mean, I don't know. Yeah, I think that the neobank vision has just much more legs. It's, clearly kind of where the future is headed. If you look
Isn't
at
that
like,
Coinbase though? Like, isn't the opportunity Coinbase is clearly going after all these big announcements, trying to be that? So what would the difference be between Base doing that and Coinbase?
I think it's about coming from like a crypto native perspective. Because if you look at like what Robinhood and Revolut and all of them have built, they're like full banking apps, right? And like what Coinbase has today isn't that. Like they didn't have direct depositing before. They didn't have like solid payments infrastructure, and like they had the credit card, which is really good. But like a peer-to-peer payments app is like much better from like a global perspective. Building the self-custodial stuff to me is super important. That's essentially how they keep their users from graduating from Coinbase app into like Ethereum. They say now you can just graduate into the base app, and we have like full stack self-custodial optionality with like all of the base DeFi embedded in it.
Right.
To me, that's awesome. I feel like that's I mean, I'm like a crypto maxi. I'm not really like as much a Bitcoin maxi. So to me, like self-custodial crypto is like incredibly important for anybody that's trying to like own the full stack.
So do you think the base app should go look more like FOMO and lean into social trading, or you think it should be more of just kind of a self-custodial wallet market discovery?
I don't know if they should lean into FOMO. I feel like they should have done that before Zora, to be honest. But like for me, it's not even just about like market discovery. It's like, how do you build like an app that can replace Citi or Capital One or Chase, that can like be somewhere where you like retreat from like your trading wallets or your FOMO, and that you can like open a credit line against and pay from that you could like get in a really simple high yield savings account, something that's not like overly complicated or overly focused on trading, but also has that optionality, because clearly people want that when they like internet bank, right? Like look at Robinhood, look at Revolut. Like it kind of seems like where the future of banks are headed is this like conglomerate investing and saving apps. So I think it's kind of leaning into all of that, right? And I don't think social really achieves any of that, and it doesn't have like any sort of precedent. Doesn't really seem like there's demand for it with like either people outside of crypto or inside of crypto. It's all very beholden to Jesse right now, which is just, I think, kind of it's kind of the nature of Base as a whole, right? Like,
yeah.
And I think like moving away from that is super important for Base and for Zora to grow beyond just like one guy retweeting Soldier Boy's creator coin and like that being what like the future of finance is, tokenize everything. It's just crazy to me.
I mean, AJC, you have a pretty different perspective, right? Like I think you said that you'd be very disappointed if they bailed on social.
Yeah, like how I think about it is I don't disagree with Sam's thesis on like neobanks being super important. I just disagree on they need both Coinbase and Base to push in this direction. I don't see like why they can't just build features into the Coinbase app to like interact directly on chain. And like they've kind of been doing that, like they're bringing DEX volume. But like to me, if they just like pivoted Base into being literally just Coinbase but being decentralized, you now have like two competing products, and I just don't see the benefit in them doing that. And then the other thing is like at the end of the day, no one is really like first going to onboard to Base before onboarding to Coinbase. So I think like they should go all in on social, and if it doesn't work, you can pivot to this later on. Like they have the moat, they have the distribution. Like I don't think anyone is gonna be like, oh, I'm never touching base again because social failed. Like they've been able to completely dominate like the L2 space through its connection with Coinbase. Like I don't think there is a rush to like build this app on the base side, especially if Coinbase is already pushing in this direction. I think social is so much more interesting because no one else in crypto is trying to build in this anymore, really. I think competition is for losers. Like neobanks are great, and I'm sure there will be many successful neobanks. But when you have 100 people, 100 companies trying to build this product, like you're gonna have to compete and knife fight against
Well, I
each other.
think
But
Sam's even had to evolve his language here to show that there's something different than a neobank, right? Like,
yeah, no, totally. There's DeFi banks as
DeFi
well.
bank.
Yeah,
We're rebranding it.
I
yeah.
want somebody just
but,
to look at me in the way that you look at DeFi banks as a narrative. I love it.
but yeah, like I totally agree that social is super high risk, high reward, and like maybe the base case probably still is it fails, but what is the marginal benefit to the Coinbase company of Base App is just a slightly more decentralized version of Coinbase versus you've now built this new social media network that dominates people's lives. And this is like the next like TikTok or something like that. Like to me, the upside is so much clearer in that scenario that I don't see how you can call it quits after like 6 months of pursuing this and not even like really allocating that much money or resources to it other than just Jesse tweeting about it on X.
Nice. Let's leave that take there because we spent already 25 minutes talking about this. But I'm glad that we got your thoughts on here. And I mean, I'm pretty confident we'll see some major change before the middle of next year, if not sooner, coming out of it. And I don't know which way it's going to go. Either like a full bet on social, which I find hard to see, or I think just as part of this general trend, the come to Jesus moment for crypto, where we're like, oh, actually, there's a much narrower set of use cases. Those use cases are very deep, but we should go build and serve those. So I guess we'll see. All right. I don't know where the fuck do we start with this?
I ripped a ton of charts out of the report for us to look through.
Yeah, I think maybe we can go through some of these charts, but maybe can you guys just give us a high level thesis? How are you sort of contextualizing the opportunity in 2026? Give us the condensed version.
That's so tough because there's so many different
I
opportunities.
know, but you're skilled, baby. You're so skilled.
For the biggest opportunity I see is definitely on the application layer. I think over the past like 5 years, we've seen a dramatic shift in like how blockchains are able to monetize. So like you go back to like 2021, all the fees went to Ethereum and like all these base layers, and that's like completely reversed. I think it's something now like there you go. That's the chart. Apps now make the majority of fees. Like that's really compelling because now you're not leaking value that you're creating to these other platforms. So with that, alongside like the infrastructure just being better, there's like an abundance of block space. Crypto is like been both de-risked in terms of like you're not going to go to jail for building this stuff anymore. I think like the clearest opportunity from both like a builder and like investor perspective is in applications and not like infrastructure and L1s, L2s that have kind of dominated the space over the past couple of years.
Do you see there being new emergent categories? Is this really just betting on the growth of perps, prediction markets, dexes, like the stuff that already has kind of product?
I definitely think there'll be new emerging categories. I mean, I think like perp dexes are great. I think prediction markets are great, and I don't think we've even like scratched the full surface of what's possible with them. So like you could build maybe rather than like building a competing prediction market, you build like a product on top of it. Like something that's compelling is I don't know if you ever like read through the Polymarket comments or something like that, but maybe building like a product based off something like that and like evolving that into something different is cool.
Speaking my language on that
Yes,
one.
we've had many conversations about this. Yeah.
Another area that I think is interesting is kind of like these tokenized collectibles and like bringing markets that already exist in the real world. They're just like really clunky markets. Like having to buy Pokemon cards over eBay kind of sucks. I have to trust people they're not scamming me. Bringing that on chain, I think is really cool. That's the chart. I think we've seen a lot of traction there, and I only really expect this to grow. I always draw the conclusion like crypto's first product was this. Like that's what Silk Road was. It was this more like decentralized. It was just for products that most people are not consuming.
Or most are.
Maybe they're not admitting on a live stream, but yeah.
Not publicly consuming. Let's go with that. But yeah, like I think this is definitely an area that like if we just shed like the crypto label, like here you can buy these cards, receive them instantly, like we verified them for you, like you're not getting scammed. I think that's a much better product than exists in the real world today with collectibles.
What were your big takeaways, Sam?
I would say I had a few, mostly centered around DeFi. I think that for me, like the most interesting thing over the last year was probably like the proliferation of perp DEXs and equity perps. I found like all the stuff like Trade XYZ is doing to be like super compelling. I mean, like of course, like the DeFi bank stuff is really interesting, and I think a lot about like what can be drawn around like DeFi banks to make them more appealing to like users instead of like a traditional bank. And so like to me, that was like exogenous yield and like modular lending that can be embedded a little bit easier, kind of like the Morphos CB Bitcoin or Coinbase to Bitcoin partnership. But yeah, I mean, like I think that people look back on the last year and we're like, oh, it was kind of a flop for crypto, and we like didn't really get a good market and all that. But if you look at most DeFi metrics, like if you look at stablecoin market cap, if you look at lending and borrowing volume, if you look at DEX volume, if you look at perps volume, if you look at like pretty much like TBL, pretty much any metric, we like everything was hitting all-time highs. I mean, it was a very healthy year for DeFi, even if token prices didn't reflect that. And I think that just goes to show that like there's something else wrong, right? Like whether it's like token holder rights, like kind of merging like tokens and equity, which is like, I think that's like a super interesting area to explore. Or if it's just like, we can keep improving the products, but clearly there's demand for like the primitive. I don't know. I mean, like, I think that there's a lot to like explore about like why we're hitting all these all-time highs on metrics, but app prices aren't reflecting it. But overall, like I looked at the DeFi market and I was like, okay, cool. Another year we're safe. Like everything feels great.
Can you, I mean, the distinction between neobank and DeFi bank, I think, is probably more clear to you than many listening.
Yeah.
Can you articulate your thesis there?
Yeah. And part of the reason that I wanted to make this separation is because like people just say the word crypto neobank or stablecoin bank, and that could mean a bunch of things, right? Like if JP Morgan issues stablecoins, are they a stablecoin bank? Are they a crypto neobank? Is Coinbase a crypto neobank? Is EtherFi a crypto neobank? Each of those look structurally very different from each other.
Mm-hmm.
And so the line that I wanted to draw in the sand was like, first off, one is self-custodial and one is like fully custodial. And the self-custodial ones are not beholden to like the whole fractional reserve banking model. So at any point in time when you lend your money to JP Morgan, they might be lending like 90% of your money out to like other borrowers, right? And that's what the fractional reserve banking model is. And that's how banking has worked for like centuries pretty much. So like this isn't a new thing necessarily, but I do think it's interesting that we have this like one-to-one backed alternative with stable coins, and we're building these banking primitives around that. And there's so much that you can do to that where you essentially like pass back that yield onto the user. Unlike what banks do, like maybe you see like, I don't know, a couple bips in yield, or like if you're lucky, there's a high yield savings account that gives like some of the treasury revenue back. But I mean, neobanks were really the first like banking institution that gave you back interest, right? So that was like Robinhood, Revolut, all of them. And they mostly did that through like interchange fees from payments and like marketing dollars. But they're still just a wrapper of the traditional banking system. And still rely on a partner bank, fractional reserve model, all of that.
I guess I'm curious if you see this as sort of like a net new application opportunity here, or if this is just another place where those with distribution are going to integrate in and sort of tap into the value of it and abstract away all the crypto.
A little bit of both. I would say that like clearly this is something that like we've been building, right? And like everybody has been trying to like create like the everything DeFi app or the everything finance app. That's not like a new concept. So almost in a way, I kind of think about it from like the DPIN perspective, where like DPIN was already being built. We just acknowledged that it was DPIN, and then we could kind of like reframe our expectations around what like the future of DPIN looked like. And part of me for that is looking at like wallets, looking at like DeFi super apps, pretty much like anything that like wants to, like kind of be this like, I guess, finance super app, and say like, okay, what does that actually look like? What's like the self-custodial version of that, and how is it more competitive than like neobanks or Coinbase, which exists on like I think a little closer to like the traditional neobank model. Because with Coinbase and all the sexes, like they own distribution, right? And in part that's because they've traditionally owned like the fiat on and off ramps. They've custodied a lot of Bitcoin, and like that's just the number one most important thing I think when you're a sex is like having the tokens. But yeah, so for DeFi banks, like part of the challenge is like how do you go up against these behemoths that like own the distribution? And I think that we're like seeing that fiat on and off ramps are starting to get parity through aggregators like Moonramp and Transact. DeFi banks are really interesting to kind of help with these like underserved areas, especially ones that like don't have like global sex access, but maybe they can like get USDT from like in Argentina, for example. They have these things called cuevas, and they're like little stands that you can like go and like give them pesos and get USDT back in like a random wallet. And it's a decentralized network of these like huts that like all share liquidity with each other. There's all sorts of things like that.
Who are we talking? Somebody in India was talking about this similar thing, right? Like it's sort of the peer-to-peer off ramp for your crypto is
Guarang.
Right. Yeah.
Guarang.
Super cool. Yeah, I think it's one of the cool. It's like so cool, and it's so crypto native too. It's like this decentralized network of like disintermediated banks. It's awesome.
What do you think will be the inflection point to like crypto neobanks emerging in earnest in Western markets? Because it still feels like we're very well served. I think having credit cards are great. Having to actually have like use stables to pay it seems worse than that. Like what's gonna get people to use crypto neobanks in the US?
Yeah, I think the key thing you said there was Western markets, because getting adoption in Western markets looks very different from Eastern markets, because or not even just Eastern, but like LATAM, the Middle East, Southeast Asia, because their banking infrastructure doesn't look the same as ours. We have the best banking infrastructure in the world in the US. So
Canada's is better, but whatever. Not gonna spoil.
Yeah, in North America, we'll say. But for the most part, I find it like much more interesting to go to like Latin America, where they've already seen like a lot of like account to account adoption, and like it's much like A to A payments, where it's like you're paying from like one bank account to one bank account. It's much easier to transfer stables when you aren't like built on top of like the Visa network with merchant banks, and there's like chargeback risk and all sorts of things like that.
For me, I just feel like the integration into my bank in some way is the thing that makes all these other apps interesting. It's the last layer, and I think we're already starting to see that happen in some sort of more competitive banks. But yeah, I mean, I have two worlds, right? It's actually far more awkward for me to get my money here into the traditional financial banking system. I'm paying fees to go do it, need to go do that so I can pay bills, mortgages, etc. As soon as I'm able to just do a transfer between like that changes absolutely everything. And I have to assume that that's coming. I want to just move through a couple of these other screenshots that we pulled out here and just get your reactions to them, because I do think they hit on some of the big open questions in the future here. That one that we've sort of been tracking with renewed interest, because again, I don't think we're the market for this, is the growth of tokenized stocks. I'm curious just how you're contextualizing that shift and that opportunity. Again, it feels like a big topic that many people take many different things away from.
Yeah, I mean, I think tokenized stocks are cool, right? Like clearly people want to bring everything on chain. I think equity perps are probably like a little bit more interesting to me, because like it really cuts into that like zero DTE option trader mentality, which I feel like is so like underexplored from like the crypto perspective, and we've just started to tap into that with perps. Tokenized stocks have been around, like they're on Solana. I don't know. I feel like it's cool. It's important that we have that. I just think that the opportunity set for equity perps today is higher than just like spot tokenized stocks. At least from just like long term, when we bring everything on chain, like sure, like tokenized stocks, like yeah, that's super important. But like right now, I think equity perps are more important to address.
I mean, is it better to look at these through the RWA lens, like that the more of these assets that we can bring on chain, the broader the on-chain economy is, the more opportunity value there will be there, rather than maybe like the specific utility of a specific stock on chain? I mean, 64% growth of RWAs. I mean, this is more growth than we even saw in the stablecoin market.
Yeah, and I mean, think about like RWA backed loans. Like that's a super important thing to bring on.
That's what makes
like, to be able to get a loan
tokenized
against your.
Yeah, that's what makes tokenized stocks interesting. Really.
I mean, the two things are like global access, which I think is huge for a vast majority of the population, and then the second thing, maybe for the Western audience, is using stocks and DeFi. I think unlocks.
Let me loot my Tesla.
Hell yeah! I mean, I think the interesting thing about this chart is just like the lendiness of Ethereum, which I'm intrigued by. So maybe AJC, go ahead.
I have a bit of a contrarian take on this.
Let's go.
As I do with most stuff. Equity perps are definitely interesting. I'm sure they get some traction just because crypto is so shit, and even if you're trying to long short Bitcoin right now, you're getting chopped to death. So maybe like there's product market fit and like just having better markets with that.
Get chopped on Tesla instead. Let's go.
Exactly. But in terms of like spot tokenized RWAs, I'm actually like bearish on kind of all the existing ones, and I think we're gonna see the winning ones probably come from the incumbent like brokerages. Like I think Robinhood Chain, if they they have tokenized stocks on Arbitrum right now, but how are any of these like RWA providers going to compete with when Robinhood Chain launches and now directly in the Robinhood app, like you can just withdraw any stock you own to that and like borrow against that. So I think RWAs are going to grow a ton, but where the value actually accrues to might just kind of be the current incumbents. And like, I don't think like building a spot tokenized RWA startup is really like a compelling idea. A much more compelling idea is like trying to get on Robinhood Chain and building a product that Robinhood is going to want to use for their core offering. So that's like my kind of contrarian take on this. I think like it's one of those things that's going to grow so immensely, but we even saw the same thing with stablecoins, right? Like stablecoins grew so immensely, but like where did all that value really flow to? It kind of all went to Tether, right? Like maybe this is the same thing with RWAs, but instead of it going on chain, it's actually just going to off chain equities again, like Robinhood. So that's my contrarian take on.
I mean, how do you guys think about Solana's ability to come in and compete with Ethereum on this stuff? Like we were at Breakpoint last week, a bunch of institutions talking, all eyes on kind of what's outside of crypto is kind of really the general theme. But these charts suggest that the kind of lendiness of Ethereum is alive and well. So curious if you see an opening there for Solana, or if you expect this to continue.
It's tough to say. I mean, if we want to let the data speak for itself, it seems pretty clear that the opportunity isn't as massive as perhaps people on Solana might think. But I don't think that necessarily means they shouldn't try to go for it, especially if like this is the general direction the space is going. I would also imagine that Solana is probably better positioned to tokenize like equities. Obviously, like the majority of RWA value today is like assets that aren't like super volatile. So basically like T-bill funds or like all different funds to get exposure to like rates. Like that's like what represents the majority of value. You don't need to trade that stuff frequently. So that does benefit Ethereum better. So like if speed and velocity isn't that important, you're going to go where all the liquidity is, and that's Ethereum. But I guess Solana's case and their edge is saying that's not true for stocks and equities. These things trade billions of volumes a day, trillions over the year. Ethereum does not have the scale to do that. We do. So that's their bet. I'm not sure if it plays out exactly like that. Like I said, I still think something like Robinhood Chain is much more compelling. But it's still probably worthwhile for them to go in that direction.
Right. The other thing that sort of stood out to us in a bunch of our recent conversations is sort of like the deep bullishness that many builders or people close to this category have, and the massive discrepancy between token prices and interest in the market. So DePIN as a category into 2026. I think we just saw Fuse. Is that what it was? It just raised it a $5 billion valuation. Seems like a bit of a narrative violation.
Yeah, they do bring in 300 million ARR though. I think.
Okay, well, that's good.
Something like that.
There you go.
So, okay, so I don't know like how many DePIN founders you guys have all talked to. Every single DePIN founder that I've chatted with is just S tier. I mean, just the best of the best in like crypto founders. And I think that alone is a reason to just continue paying attention to DePIN, because of just the complete adverse selection in founders in this space, right? Like anybody can be a founder, anybody can launch a project and like raise a little bit of money, but the deep in founders actually have to know how shit works. And that's just like, they're just all impressive. I think that like there's a lot of opportunity for like some of these like InfraFi yield funds that we're seeing, like USDAI, DayFi. I think that they're gonna maybe have an easier time with like the tokenomics stuff when they build like this portfolio that just kind of gets you access to like energy revenue or GPU lending revenue, and it's just like a really simple token to invest in, or it's like wrapped around a stable coin. It's a lot easier to get behind than these like super inflationary tokens that like just kind of get spit out to people who contribute to the network.
That's the problem. Like the token models are fucked, right? Like we were talking to the Helium, like Abe from Helium last week, and like adoption metrics, revenue, like the charts look great up and to the right, and the token is the complete opposite. And yeah, go ahead.
Well, I was gonna say, I believe Helium is like actually doing a bunch to like kind of fix that with the token. Like I think they're now using like all revenues to buy back Helium. But
it's not equity. That's like what's unclear is that like tokens and equity with them is like still like very, very complicated between like Nova Labs and like the Helium app.
Sure. I think the bigger issue, and like I think like trying to fit like zoom into any one industry or one sector in crypto and like retrofit it is perhaps like making a mistake. I think the bigger issue is that the vast majority of capital in the space wants to buy the next Bitcoin. They want to buy the next L1. These assets have massive monetary premiums, and like at the end of the day, if we're now going to start evaluating stuff through like a revenue lens and like actual businesses is probably what we should have been doing all along. The capital to invest in that stuff is not here. Like that's not why people were buying Ethereum. That's not why people are buying Solana. So until you have that change in like capital behavior or change in user behavior, I think a lot of these assets that are now generating great revenues, so not even just in DeepIn, but like in consumer apps, Pump Fund, Hyperliquid, whatever, like you can find plenty of tokens that now trade at extremely favorable valuations, and they're not going to catch a bid for a while because the capital in this space doesn't want to bid it. But that's kind of your opportunity, right? Like if you could take a longer term view and be like, wait a second, no one else is paying attention to this stuff. These are really good businesses. No one wants to buy them because everyone else is chasing the next narrative or shiny thing. Like that's kind of your opportunity. So I think this is something that probably gets solved over time as people realize, wait a second, why am I buying Solana at 300x PS multiple when all its revenue is coming from Pump Fund and I can buy Pump Fund at 3x PS multiple, right?
I completely agree.
It's a great question. All right. We have just rambled our way through our entire time here, but I want to leave it with one last question here. Q1 2026. Are we bullish? We buying some tokens for it, or are we still sitting on our hands?
AJC, you go first.
I'm the wrong person to ask. I am a permabull. I will always be bullish on this industry. I work in it. I love this industry. So like I physically cannot get bearish on crypto. It's just not possible to me. If this whole industry fails, I'm going down with it. So
yes,
I'm in. I'm always buying tokens. I do think like to give a more constructive view, I don't think Bitcoin is just going to be a shittier asset compared to gold and stocks forever. Like this will come to an end eventually. Does it come to an end in Q1? I don't know. Maybe it doesn't. I think your benefit in this industry is just simply taking a longer term view than everyone else because everyone is just chasing the quick 10x, 100x or whatever. So as long as like you're investing or allocating with that in mind, I think it's fine to be buying tokens here.
Love it. Sam?
I completely agree that like anybody who's really concerned about what Q1 looks like that isn't like a very good trader should stop being concerned about what Q1 looks like and should try and like think a little bit more long term. The thing I guess that I'll say is that like when you look at the past few years, it doesn't feel like it was a regular bull market, even though like Bitcoin went up 8x and Solana went up like 20x or whatever. Like those all seemed very market structure driven as opposed to this like typical like cyclical price movement that we're like kind of used to. I think when I look at what's holding back tokens now, a lot of it does come down to like the token holder equity stuff. It comes down to like a lot of these apps aren't structured very well, where like the fees accrue back to like tokens. Or they're structured in a way where all the fees accrue back to the tokens and they don't spend any of it on growth. And like, there's just a lot of things that I think need to change that maybe can't happen in like a few months. They maybe just kind of take some time.
Yeah.
So I wouldn't say that I necessarily have any sort of predictions about what like Q1 is going to look like. But like, I'm the same as AJC. Like I'm just long-term up. So I'm just not concerned.
Get a job,
the
hold your
short term.
spot, and rock and roll.
Exactly.
Hi,
Right,
Bitcoin.
gentlemen. I mean, you absolutely cooked. If folks haven't read this yet, I mean, you can find it all over the internet. Messari's 2026 predictions. Probably good reading over the holiday break. If you're taking such a break, you're going to need some time to get into it, or do like I do and just dance with ChatGPT to see the true insights in there. All right, guys, appreciate you hopping on, and if we don't see you soon, happy holidays.
Thank you for having us.
Peace,
Appreciate
fellas.
you.
Cheers, guys.